Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon, about 10 after 6 on October 12th, 2014. We are going to take a look at the S&P 500 and see if we can make some sense out of things. Obviously, it was a very rough week in the markets, but hopefully we can see something that might be going on here. And this does not really come as that great a surprise. We'll talk more about it later. Let me first remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Starting out here on a 10-minute chart, I just want to remind you that we had been looking at a situation in which most of the trading had taken place between this upper resistance line and this lower support line. And the idea was floated last week, I believe on Thursday, Wednesday or Thursday, I believe, that if we break this lower line, then we could very well be looking at a move to about 1870. Or if we broke the top line, we'd be looking to a move over 2020. Well, it is pretty clear now that it is the lower line that is showing the weakness. But there is something interesting going on here that I need to point out to you, because we've got a couple of, while we've got this pattern right here, we also have a couple of things that say we could bounce here. So it's frankly a bit confusing. I will say this: if we do not bounce and we get through 1900, 1870 would seem to be a piece of cake. Famous last words, perhaps, but that's the way it seems. So let's take a look. First, if we back off on a 2-hour chart, you can see that at one point we were looking at a potential inverted head and shoulders pattern where this would have been the left shoulder right here. This would have been the head. This would have been the right shoulder. And we never got over that neckline. We never got a false breakout. We simply never did get over this neckline resistance. So it's not like the market has surprised us by saying, hey, I told you I was going to do one thing and now I'm doing another. Rather, the market said, this looks like we could go up, but failure to break that line, then the pattern is not confirmed. And at this point, this pattern is not confirmed, and I'm very close to, well, I think the pattern is busted. I mean, I think that this is not going to play out as an inverted head and shoulders pattern. Now, could we be forming another inverted head and shoulders pattern? Well, it's way too soon to even consider that possibility, but it's happened before. So the bearish situation here is that we are looking at the potential of a double top, where we have one peak and then another peak. A failure to bounce at about right about where we are. A failure to bounce means we are looking at a level that will happen that will take us underneath the previous low. Even though it was an intraday low, I would still use that. And we would be looking at a breakdown of this double top that would lead us to a level of probably, roughly, I want to say, about 1800, maybe something in the 1790s. So that would be about 110 to 115 points lower than where we are right now if we break this support line right here. There is another bearish possibility, and that is we bounce where we are right now, and we come back and back test this broken red support line, which then turns everything since the middle of May until whenever this rally might happen, that would turn this into a head and shoulders top. And where would it point to? Same thing. The downside target would be measured by the height of this move off of 1904 in either case. So if we break this line now, then we're looking at 1790 to 1800 as a minimum target. If we rally, then break it later, same thing. We're looking at 1790s to 1800. Now, what could happen that could save us? Well, we could get a really, really solid bounce on this line. I remind you, this blue line goes all the way back to, well, got to go back even further. Goes all the way back to March 9th, 2009. We've had 1, 2, 3. Then we went for 2 years without a touch, approximately. And now here we are resting on this line again. Now, you might want to take a look now at a 15-minute chart, or let's tell you what, let's do a 10-minute. Because here's the thing that makes me think we might get a bounce here. I'll tell you what, before I do this, it's 6:17. Let me go check the futures real quick, and I'll report back with that. Okay, the futures are currently down a bit, but let's see, not so much that that we necessarily say that it's going to be a bloodbath tomorrow. They're down about 7. Hold on, let me double check that again. Hold on. Down about 8 points in the S&P. So we'll see what happens with that by tomorrow morning. But what looks kind of interesting here is the fact that we've had a downtrend, and each time a downtrend has been broken, we've had a nice leg up. For example, here's our downtrend. It broke, we had a leg up. Here's our downtrend. It broke, we had a leg up. Now the question is, it looks to me that we could define the last downtrend by these 1, 2, 3 touches, in which case we actually broke out of that downtrend on Friday, and maybe this is a fairly deep back test. The other, that I think is a valid interpretation. It is not the only one. We could also say that this is actually our downtrend, and this is not. So all of this to say, if this is the downtrend line, we could bounce as a short-term bounce off of this back test of this broken resistance line. If you want to be safer, I would say keep this line in mind as well. And if we get over this line, then I don't think there's any question that our downtrend has broken. Again, the overhead selling pressure that should have been built up over the last 2.5 weeks should point us to about 1870. But we are at some potentially significant support levels that are longer standing than what's taken place over the past 2.5 weeks. So I'm gonna reserve judgment right now and let the market show us what it's gonna do. But one thing is for sure, this is at this point pretty ugly stuff. So guys, just be careful out there. And I want to remind you too, is that often when you have a legitimate break of a trend, you will get a back test. The market will often, what it takes away in a downside breakout, you will often get, if you're patient, get a little bit better opportunity to get more out of your investment. So if we break through some support here, and you feel like, oh my goodness, what do I do now? What I would do personally, and this is not what you should do, but this is what I would do personally, I would wait for a snapback rally or a pullback, and if it's a clear case of a situation where I am solidly convinced that either a long-term or an intermediate trend is over, then get out of some long positions on a pullback rally. So, guys, that's just kind of the unfortunate situation here. You know, when we were talking about this potential inverted head and shoulders pattern, you'll recall we were also mentioning in almost the same breath the possibility that if it doesn't confirm with the breakout, we could be looking at a top pattern here. And I think with what we saw this past week, at this point, I would say the odds would seem to favor, or certainly would be greater in favor of the topping pattern than they were even just on, well, I would say just a week ago. A week ago, we were looking okay. Now, this is looking pretty rough and ugly. So, guys, I appreciate you taking time out of your day to watch this video. Let's keep an eye on it together. We could be at a significant inflection here. And I'll remind you, we've gone almost straight up for 2 years. So, let's just not quite, for probably about 22 months. So, let's see what the market has in store for us this week. I want to thank you for taking time out of your day to watch this. Thank you so much for your very kind support.